Finovate showcases cutting-edge banking and financial technology through a global conference series featuring short-form demos and thought leadership. Now, the conversation continues on the Finovate podcast.
Hi, everybody, and welcome to the Finovate podcast. We are continuing our conversations with the FinovateFall 2024 Best of Show winners. And joining me today, we have Joseph and Daniel Ahn, CSO and CEO respectively, and co-founders of Delfi. Gentlemen, thank you so much for joining me today.
Thank you so much for having us. Thank you, Greg.
So, as I mentioned over the last couple of weeks, all of the demo videos from FinovateFall are available at finovate.com. You can find Delfi's video up there, and I highly recommend taking a look at it. But for people who haven't had a chance to see your demo or who haven't heard about Delfi yet, can you start with just a quick introduction of yourselves and what Delfi is all about?
Sure, happy to. I can start. So I'm Daniel. I'm, again, the co-founder and CEO of Delfi. I did my PhD in economics from Harvard and also had a stint in policy as well as in the private sector. I was the chief economist at the State Department and also at BNP Paribas, the European Investment Bank.
So yeah, just to talk about myself, I'm Joseph Ahn. I'm the co-founder and president and the chief strategy officer of Delfi. I got my PhD from Harvard Business School in strategy. My focus on my career has been AI and data science. So I served at a number of large institutions, including Big Four. I was a partner at a firm called West Monroe Partners, and I used to be the chief data scientist for the Office of Management and Budget in the White House.
So there's some pedigree here, I think it's fair to say.
Yeah. Really what Delfi is about, it's trying to make, I think, one of the world's hardest problems around balance sheet and portfolio optimization, which is a very complex problem that used to really only be tackled by very sophisticated large institutions with the resources and the technical know-how to either build that capability internally or to hire big, fancy Wall Street firms. We're trying to make that more accessible and affordable to enterprises of all sizes.
Yeah, no, it's really cool technology, and we'll get into Delfi a little bit more specifically later on. But before we do, I want to start by asking about the story that you used at the start of your demo, where you talked about your grandfather and his responsibilities after the Korean War. Can you share that story with our audience here and talk about how it helped to guide you to where you are now?
Yeah, absolutely. I would love to do that. So yeah, our grandfather on our mother's side was actually the Minister for Economic Planning in post-war Korea. So when Daniel and I were growing up, our grandfather used to visit us and tell us stories about his experiences. And one of his major responsibilities was stabilizing the price of food. And he really, really emphasized the importance of that. It's only with a stable foundation that you can have the freedom to pursue growth. I mean, you need to be able to eat, and you need to know that you can eat tomorrow before you start thinking about things like innovation and investments. And from our experiences and what we heard talking with bankers, the same thing applies to banks and other financial institutions today. Bankers obviously care about innovation. I don't think Finovate would be as huge as it is if that wasn't the case, but they need to have that foundation of stable net interest margins and cash flow for them to start really then investing in their communities and businesses with new products and creative approaches that'll really allow them to excel and express their ideas. And that's ultimately what Delfi is its core purpose. We want to make capital stable for banks and other financial institutions that enable that kind of dynamic growth, the same way that our grandfather made the food price stable to enable the dynamic growth of the Korean economy.
Yeah, and when you think about it in those terms, obviously it creates this kind of real world necessity that I think sometimes we overlook when we get into the fintech bubble and even the banking bubble more broadly. We sometimes forget about how grounded all of these things are in people's actual lives. And so I think it's a really important piece to keep in mind. And it's a good transition now as we get into Delfi more deeply. Obviously, a lot of what you showed on stage stems from a bank's balance sheet risk exposure. Let's start by having you just spend a little bit and talk about where that risk comes from.
Sure. So, banks are necessarily in the business of taking on interest rate risk. Their whole business model is structured to take in short-term deposits and invest them in longer-term loans and securities. But I think it's really easy for bank executives to get trapped into focusing too much on the minutiae of loan underwriting or creditworthiness or their securities portfolio or attracting depositors. And they end up just treating interest rate risk too much like a chore that's just forced upon them by regulators. And once they're in that mindset, then banks just try to get away with the minimal amount of time and cost spent to get past the next bank examination. And that's both short-sighted and really dangerous. I mean, it can be existentially dangerous, as we saw with Silicon Valley Bank. So what we're at Delphi trying to do is we're trying to spearhead really a revolution in mindset, putting bank asset liability management and balance sheet risk return optimization away from a cost center way of looking at it to where it really belongs as a strategic value driver that needs to be at the beginning and the end of every executive meeting. And we do this by leveraging, technology. We have digital twins and we have machine learning so that banks can now see in real time where they sit in the risk return frontier and rapidly explore balance sheet strategies that can enhance their bottom line. So what we really hope is to transform what was a multi-hour slog through hundreds of pages of mind-numbing tables into something that's much more dynamic, visually intuitive, and interactive exercise in strategic value creation.
Yeah, and here's again where I think I would advise everybody to take a look at the demo, because seeing it is believing, and so you can kind of really get a sense of how clean the tool is, and how powerful it is there as well. But what you're talking about here is almost more kind of a human nature problem, right? I think we can logically know that there are these big existential risks out there, but we don't necessarily feel those on a day-to-day basis, which makes it really easy for us to kind of ignore them, get into some of those minutiae you were talking about, and focus on these things which are going to impact, your next day, your next week, without really looking at these things that will impact, your next 5 years. Obviously we've had a period here over the last couple of years where there's been more interest rate volatility. We've seen kind of the example of SVB. Are you finding that people are on the bank side are mentally making this shift and starting to pay more attention to this space? Or do you think that there's still a lot more work that we have to do to get people to a point where they're really looking at it at the level that they should be?
Yeah, I mean, great question, Greg. So I think what we've seen in the market is that banks are definitely more aware of this problem. I mean, everyone knows SVB and kind of what happened. But I think that there's still a challenge going from awareness of the problem to then action and like what to do about it. And I think that the lesson that a lot of banks have taken from SVB is a bit negative by nature. And let me unpack that statement a bit. So I think that many banks are currently focusing on what SVB did wrong and either think that it either doesn't apply to them or that they can just avoid that particular mistake. But actually, what we believe is what is more necessary is that more fundamental mindset shift away from just narrowly what not to do, but how to proactively manage that risk. And that's why we think Delphi is so important, because we're bridging that gap. We're providing that seamless connection between understanding how much risk is on a balance sheet to then actively what to actually do about it.
Yeah, and so here's where I think let's transition into Delphi and get a little more specific. So what do you actually do to make it easier for banks to understand and take that potential risk into account as they make their decisions?
Yeah. As we can show in the demo as well, with the Delphi platform, bank alcos can now see in real time the potential impact of any strategic decision they might make on the balance sheet performance. And the alcos are now embedding this platform into the very decision making cycle in their alco meetings. It's generating this positive feedback loop whereby now you can have a discussion on all the decisions that you can make as a financial institution by allowing this impact analysis to be very fast, low touch, and really accessible at the fingertips of every committee member. You can immediately answer the question, what is this decision going to do to my performance? What is it going to do to my exposure? How is this moving me along the trade-off between risk and return? And that is, I think, really driving a mindset shift again away from this is just a chore to now this is really strategically adding value to my institution.
Yeah, and I think one of the things that really struck me about it was, this is not something, to your point, which has to take a bunch of time. It doesn't have to feel like a chore, but as you have these potential decisions to make, do I need to do more of X or do I need to do less of Y? You can really quickly get out Delphi and say, okay, what was the impact going to be if I do this? And it's not something that you have to spend a ton of time with, but you can get an answer to this question: what happens to my risk exposure in this really significant area as I make these other decisions? And so, it's not something which needs to derail that decision-making process, but man, it sure is nice to know exactly what you're potentially doing as you're making some of these really crucial decisions. And this is something I think we talked about a little bit before you actually got up on stage. One of the challenges you have is making sure that the audience is really able to appreciate what you've built, and they only have 7 minutes to understand. Based on the feedback that you got at the booth, do you think most of our audience was able to kind of get it, so to speak? Do you think they understand, how Delphi works and the potential impact?
Yeah, Greg, I mean, the tool is very broad and has many potential impacts. So, there's a lot to talk about, but I think that actually people did kind of get what some of the impact of what we're trying to do. So in our experience, and I'm sure a lot of people listening will understand this, but I think people respond to products when they can understand how it makes an impact in their existing processes and the metrics that they're already thinking about, that they're already caring about. I think the reason that the Finovate demo landed is because we tried to tell a really clear story that's built around the ALCO meeting. And then we used the Silicon Valley Bank situation as the particular example to be looking at, and because that particular event is really well understood. So, while everyone knows the Silicon Valley Bank story, when we actually do one-on-ones with the banks that were our customers or potential customers, what we try to do is we try to understand what is the particular problem they're facing right now, what's on their mind, and then how Delphi can fit into that. Just an example, we just spoke with an institution that had very nice net interest margins thanks to their asset acquisitions. And they wanted to see if their new security strategy was going to bring exposure that they weren't familiar with or used to. So Delphi fits right in there. One funny note I'll add is after the demo and people were coming up to a table afterwards, a lot of them were actually pretty happy about how Delphi is not a Gen AI product. It's fundamentally not a generative AI. I mean, at its heart, we're an optimization engine, so we're more akin to like an AlphaGo or a deep learning chess engine than something like ChatGPT. I think that also helped build some confidence because I get the feeling that there's some skepticism about this explosion of Gen AI products that are in the market right now.
What? That doesn't sound right. No, I think you're spot on. It is something that people are, and I think rightfully so, looking at with a little bit of a skeptical eye right now, which isn't to disparage companies that are working in that space at all, but many of those companies themselves will tell you how difficult it can be to sometimes overcome some of that skepticism. And you can really, at least from my perspective, I can see both sides very clearly. I want to zoom out a little bit and talk in more macroeconomic terms. Because I think there's potentially some really cool stuff that happens if we kind of take Delphi and extrapolate. And so the question is, if banks are able to reduce this kind of risk exposure more broadly, what does that do to the economy or the resilience of the economy as a whole?
Yeah, it's a great question, Greg. Daniel here. So I'm the macroeconomist by training, so I always love these kinds of questions. I'm actually spent some time to think really deeply about this. And I think the answer is that insofar as we are helping banks address any interest rate risk on their balance sheet, this is actually going to improve the transmission of the Fed's monetary policy into the economy. So let me unpack that a bit. The textbook understanding of how monetary policy works is that the Fed raises or lowers the target interest rate, and this gets transmitted into the broader economy by banks that are intermediating between the Fed's open market operations and the broader economy. However, if the banks are sitting on and absorbing a lot of that interest rate risk exposure directly themselves, and it's their balance sheet that gets walloped by Fed policy and rate volatility, then actually the transmission mechanism isn't working very well. But with Delphi, now that banks can better understand and manage the interest rate risk exposure and pass along any unwanted risk exposure off their balance sheet to their counterparties, any move made by the Fed doesn't just get absorbed into the bank intermediation channel, but instead gets passed through and propagates more directly into the economy. And this has to be a good thing for policymakers and for the economy as a whole, because it now allows the Fed to more fine-tuned fashion meet its dual mandate of price stability and full employment. Let me say one other thing, though. In the medium term, Delphi, we are hoping to work not just with banks in managing their own interest rate risk, but to work with them to provide algorithmic auto hedging services that they can in turn pass on and provide to their own clients as part of a loan or a line of credit or whatever. So in doing so, we're actually hoping to touch and improve risk management across the economy more broadly, across a much larger swath of businesses, and not just the giant Fortune 50 companies with access to white shoe Wall Street hedging services. And this should allow the economy overall to become a lot more resilient to financial shocks.
Yeah, I love the ambition. And I think, again, I've clearly wandered into your wheelhouse here with this question. So I love getting you to get answers so excitedly. But I think this potential scope is really massive here. And obviously, it's still early days for Delphi. And so, I certainly wish you the best of luck in realizing those ambitions. We have time for one more question. And I want to actually end on a kind of lighthearted one. Obviously, it's difficult to found a company with anyone, but you guys are brothers. How are you able to work together as brothers? I know my brother and I don't always see eye to eye on everything, and I can't only imagine how difficult it would be to found a company with him. And my mom does listen to this, so I have to insert, Mom, I love my brother. There's no problems with us, but just I think it's something that a lot of people would have this question. Does it ever make family gatherings awkward? Has it kind of changed the way that you've built the company? What can you tell us?
Yeah, I think anyone who's ever been married or has a significant relationships knows that, a challenge can either kind of break the relationship or cause stress to it, or it can actually, I think, paradoxically strengthen a relationship. So at the beginning, we definitely had more of a learning curve. Daniel and I were always close, and so we've always spoke a lot over the years. But this is the first time we were all in on something as huge as a startup together. So at the beginning, we used to debate a tremendous amount. But over time, I think something kind of interesting started happening. We realized that a lot of the times our arguments ended up being about how we phrase things and not about the core ideas that we had at heart. So
yeah, it was like a potato situation.
Exactly. Yeah. And after a while, therefore, we realized, we might be saying it a different way, but we want the exact same things. And our ideas are actually really aligned, and we trust each other's kind of perspectives and new ideas. So it took some time, but I think our initial struggles actually made us closer and strengthened our trust. And so the real danger in the family gatherings now is actually they all turn into strategy meetings because we're so obsessed with Delphi. So we're just talking about it all the time. And so, for example, if like Daniel's wife is there, sometimes I have to put a lid on us and say, okay, well, maybe we should bring in the rest of the family into some of these discussions.
Yeah, you better have a strong grasp of the material if you want to hang at the table when the ons get together. I think it's probably fair to say. So cool. Well, I want to thank you both for taking the time. Congratulations again on winning Best of Show. Again, for anybody listening, take a look at their video. The company is called Delfi. You can find it at finovate.com/videos. And we will continue with our Best of Shows next week. Until then, thanks as always for listening to the Finovate podcast.
Thank you all.
Thank you.
The Finovate podcast is produced by Informa Connect in association with Provoke.fm Media. Check out Finovate.com for information on Finovate's upcoming shows and to learn how you can get involved. The discount code Finovate Podcast will save you 20% on tickets to all of our events. And you can email us at info@finovate.com for information on sponsoring, speaking, or demoing. Thanks for listening.